This is frequently asked questions about the tax-free cash growth warehouse strategy. How to finance a car.
How to finance a car with infinite banking and the tax-free cash growth warehouse strategy. Since this is a hot topic according to Google and YouTube searches, I thought it would be good to share this example of financing a car with the infinite banking tax-free cash growth warehouse strategy. This example will demonstrate how powerful this strategy is. You will see that by employing this TFCGW strategy, you can not only skip all the financing fees and interest, but you can grow your wealth at the same time as you finance your vehicles. This example is also detailed as a part of our free 60-minute educational webinar, How to Become Master of Your Financial World. The link to that webinar is in the description box right below here. Because there is so much more included in the webinar in addition to this example, the information that you really need to know, you may want to just skip this video and go straight to the webinar. If not, and all you want to learn is how to finance a car, self-financing with the most powerful finance strategy in history, get your notepad and pen, strap yourself in, and let's go. I need to set up the example here. We'll be using a cash value whole life living account as our source of financing. All about that is in the webinar and in the books. For this example, we'll be using a 26-year-old female as the owner. Her account is set up as a 7-pay account. That is, she funds the account with annual deposits for 7 years, and then she borrows against her account and repays it monthly the same way she would as if she had taken a loan from the bank to finance her car purchases. Now, this setup is for expediency. There are many ways to set up one of these accounts. This just keeps it simple. Okay, ready? Here we go. And we're going to show multiple car purchases over a 20-year period to really show how wealth is accelerated with this method. The graphs will show the years of purchases, the repayments, and the growth of the account in both cash value and benefit value. We're starting with a young 26-year-old because we want to show how this can work for a lifetime and end up with several cars having been purchased and a healthy retirement income supplement to boot.
Okay, you're going to notice that this graph here has a column from left to right. One for the years of the account, next for the age of the owner, then the annual premium deposit made, car loan payments, car purchases, the cash value of the account, and then finally the death benefit amount. Again, we're using a young 26-year-old for this example because we want to show several car purchases over time. But this strategy works the same no matter what the age of the owner of the account is and no matter what the purchase is. We look at the annual premium as deposits or funding of the TFCGW. This could be your personal tax-free cash growth warehouse. So you want to stuff as much cash in there as you can. That's how you're going to get the most growth and equity in the contract. Equity or cash value is what you leverage to use as financing for your purchases, in this case, cars. So now, instead of depositing our $10,000 into a bank, we fund our own cash warehouse with it. Again, this example shows annual funding for the first 7 years. Notice that about 60% of what we pay into the account in the first year becomes equity and available cash value for us to leverage. That goes up to about 64% the second year and continues to climb each year. This also is a matter of design. That is, the way the policy design is optionalized. But that is for another discussion. Mindset is important. We are creating our own personal financing system with our own personal tax-free cash growth warehouse. And by the way, this is an asset, not a liability. So we think of our premiums as deposits, which they are, that are funding our personal cash warehouses, not as a price we're paying for a product. You'll see as we continue that this truly is the case. Now, to be successful with this strategy, you must follow 3 simple rules. 1, pay yourself first. That'll be the deposits you make into your TFCGW. 2, pay yourself interest. And 3, recapture. Recapture is the best part. It means to gain back or recapture all the principal and interest that leaves your warehouse as you leverage your cash value to make purchases. Now, this example shows funding the warehouse for 7 years. And in the 3rd year, the owner leverages the cash value to purchase a car. Now, if you take a loan from a bank, you have to pay them back principal plus interest. We must treat our leveraging of our TFCGW the exact same way. In this example, the repayment was at $500 per month, or $6,000 per year. So that's an additional $5,000 in interest over the 5 years of repayment. Now let's add up all the out-of-pocket expenses. At $10,000 a year in premium deposits, that is $70,000. Repaying the $25,000 leverage loan plus $5,000 additional interest is another $30,000. Altogether, that's $100,000. If we remember, that's over 5 years. 5 years, yeah. So if we subtract the $25,000 leverage loan, the actual out-of-pocket is $75,000. Now, notice that the cash value in our warehouse is now $67,881 at the end of the 5 years, and the total of 7 years that we've been funding our warehouse. When we subtract that $67,881 from the $75,000 out of pocket, we see that we've actually recaptured 91 cents of every dollar after purchasing the car. Now in your experience, do you know of anyone who ever recaptured any of the principal and interest paid for any vehicle ever purchased? I'm guessing the answer is no. I know we never have before.
This example shows that the owner of this account has recaptured 91 cents on every dollar paid out for funding the account and repaying a leverage loan to buy a car. And she still has the car. That's about 91% better than any other method, and it just keeps getting better. For the full results of using this strategy to self-finance the purchase of several cars over time, watch our 60-minute webinar, How to Become Master of Your Financial World. And you'll see that after just 2 car purchases, we achieve a recapture of over 100%, actually 119%. And it gets better and better as time and purchases continue, eventually recapturing like $7 for every dollar spent. I know it sounds incredible. Watch the video or watch the webinar, yeah? If you like what I've shared with you here, you're going to love the full TFCGW webinar. Click the link in the description box below and watch it now. But before you do, be sure and subscribe to this channel so you won't miss out on all the good stuff coming, and go ahead and post a comment or question in the comments section. Now, go watch the webinar. Aloha for now.